7 to 7:30 is one of the trading regions that's been pegged out for the short term for the local unit, that relative to the dollar, where things are pretty difficult to call at this stage. What's your short-term outlook for the rand?
Well, good morning, Alishia. Our currency guys at the moment are looking for a range that's very similar to that in the very short term. It's probably a little bit tighter, 707 to 720 over today and probably for the rest of the week. So, you know, we're kind of range trained at the moment, and essentially we are still taking most of our guidance from what's happening, particularly in the Eurozone, as well as noises out of the States. So until we breach one of those levels, I imagine we're still going to be very much stuck within them. And I suppose that also goes for the rand crosses as well. So ultimately, we're all external data watchers today and probably for the rest of the week.
While that may be the case for the short term, I've been coming across commentary saying that, you know, the rand should benefit in the medium term, as of course we've had Fed Chairman Bernanke commit to lower rates for longer, and as currency flows to higher yields, and that's pretty much one of the only known factors in the markets right now. What's your view on that kind of commentary?
Well, I mean, it's a big question to kind of draw a direct connection between the Fed's implicit promise for an environment of liquidity in the States and implicitly the rest of the world, and what that might mean for high-risk assets, commodity prices, and also the rand ultimately. You know, there's a big difference, I guess, between making a promise to sustain this kind of environment and then embarking on a new program for asset purchases, a QE2 or QE2.5. So I think it's difficult at this stage to draw a direct kind of relation to say that this kind of action by the Fed will serve to reflate the world. I mean, to look at it in a little bit more complex terms, it really depends on what kind of effect that has in stabilizing markets and hence providing a bit of confidence.
Of course, that, Seamus, is the key. You know, markets need to stabilize first, and when it comes to that, we're very much on shaky ground. Just yesterday, EU problems, you know, really being highlighted once more, and that with Germany's GDP specifically standing out, slowing down, where this has been offering support for the rest of the Eurozone economies, or those peripheral territories more so than anything else.
That's exactly correct. I mean, yesterday's data flow from Europe was not very supportive as well for any kind of stability. In fact, the fact, particularly when you look at the details, the fact that the core economies in Europe, which have really been holding together any kind of sort of semblance of economic stability, looked really shaky and much more so than expectations at the particular time. The fact that the Mercosur summit yesterday also served to disappoint to some respect and provide some sort of policy underpin to the European sovereign debt crisis also didn't help matters at all. So ultimately, we still seem to be lurching from sort of sticky patch policy responses to what's been going on in Europe, and that hasn't helped the risk environment at all, and hence risky assets and the rand implicitly haven't benefited as much as they would under more positive data flow and policy direction.
As you say, Mercosur summit, Brangelina, it kind of comes through to my mind. I haven't come across that phrase, but of course that a relationship we'll be monitoring moving forward in terms of the kind of resolution they actually put to the fore for the long term. Seamus, when it comes to local data points, we're anticipating retail sales numbers later today. What are you expecting on that front?
Well, Standard Bank is looking for a little bit of a bounce back from May's very disappointing print, essentially 0% growth year on year and a very sharp decline month on month, April to May. So a little bit of a rebound seems very reasonable. The market's looking for 2.1. We're a little bit more optimistic at Standard Bank, looking for 3.5 year-on-year growth in June for retail sales. But having said that, a little bit optimistic should be tempered somewhat in the sense that it still is a relatively poor number compared to historics. And so, you know, I'm not entirely sure the currency market is going to be taking much direction from this, but it is an important data release in the sense that it is the final piece in the puzzle for Q2 GDP, which we'll be getting towards the end of this month. So it is an important data release over the medium term. For the day, however, I doubt the rand's going to be looking at it.